Hey, hello everyone. Okay, now, so welcome to Portfolio Building on Fridays with Terence. Okay, you can hear me right now. Drop a note, say hello, and we'll get things moving. Okay, let's move. Let's move. Yay, hey, Donkel. Okay, we have a Facebook user. Right, Facebook user, can you click on the streamyard.com/Facebook? All right, and then approve StreamYard for Facebook use, and we'll be able to see who's leaving comments. Yeah. All right, now we have another one, Facebook user. All right, hi Florence. Oh, everything is skipping so fast. All right, hi Jonathan, hi Florence, hi Nelson. Okay, we do have a couple of Facebook users over here now. So if you can click on the streamyard.com/Facebook link and then approve Facebook for your use, we'll be able to see who's leaving comments in our live session. Okay, hi Jenny. Okay, without further ado, thank you very much for joining me once again on Friday. All right, and today it's a slightly different session. Now I say it's a slightly different session, not because of how I'm going to run it, okay, but simply because of what the market has done. All right, now all of you should be aware, all of you should be sort of prepared for these kind of events. Right, that's what I've been harping about over the last few weeks. All right, and today in this week's session, we finally see a glimpse of it happening. All right, it may just be the start. It is not the crux. It is not the climax yet. All right, we are just at the beginning of what may be a possible downside move. Okay, now let's go into the charts. Let's go. Yes, Nelson. I don't know why, but yes. Okay, now maybe it sounds better now. Not really. Okay, now, so let us get going, and we will start this session officially right now. And before I get going, I need to put out the standard disclaimers before we carry forward. Now, so I'm going to be discussing live moves, live trades, and live portfolio management actions that I'll be taking on the model portfolio that we're building in this public session. Now, please note this public portfolio that I'm building has $100,000 in capital. All right, so it's a $100,000 account. All right, and the only strategies that I'll be covering in this live session is actually portfolio puts. All right, so I do put some hedges on the portfolio, right? But the main strategy that we cover is portfolio puts. Now, so what is portfolio puts for some of you who are new to options? All right, the simple way to put it is instead of buying stocks, right, I choose to sell put options on these stocks I'm willing to buy, right? So I don't have to own the stocks, right? But I can make money by selling these options. So by expiry date, if nothing happens to the options, right, my counterparty is not able to make any claims at all, which means I don't have to buy their shares, right, and can just keep the premiums, right, which means I begin to operate very much like what insurance companies do, right? I don't want my counterparty to come back and make any claims at all. All right, so by selling put options, all right, I will be putting up the full cash requirement, right, to actually buy those shares. Why? Because if an accident does happen and the stock price drops, right, if I have to buy the share, I want to make sure that for this portfolio that I'm building with mostly public people, all right, who are attending this session, all right, I want to show you that you have the capital ready to actually buy up these shares, right? And yet, with these kind of investment capital that we put up, all right, we are still able to gun, all right, for anywhere from 15 to 20% per annum. Yeah, now it takes us less than 15 minutes a week, all right, to run this portfolio as what you've joined us and see, all right. Most of the time I'm talking about market updates and stuff like that, but the execution of the trades that I add on is actually just 15 minutes, all right, and we are able to achieve about 15 to 20% per annum. So that's our goal that we set over here. Now, of course, if you want to achieve much more, all right, or you say, Terence, I have a much smaller capital, what can I do? All right, you can join one of our many mentorship programs out there, right, that is best suited for you, right, and where you're coming from. Yeah, okay, all right. Now, so I have more updates and details to share with all of you who are joining me today, all right, but I'll leave it at the end. All right, let's go to the portfolio first and let's go to our moves over here. All right, now, so if you felt that you have benefited from these weekly sessions that I've done and I'm running for you, all right, it would help me a lot if you can click on the share button, all right, at the bottom of this post. There's a share button so you can share it out, all right, and reach more people, all right, within your circle, and also get them to notice, right, that, hey, you know, there's like a free lesson that they can learn every single week, track the portfolio, see that, hey, this is doable, all right, and then perhaps they will embark on their own investment journey as well. Okay, all right, now, so if you can click on the share button for me, that would be absolutely awesome. And then for the rest of you, could you just click on the like button as well? Yeah, all right, the like button. Thank you very much. All right, now, so let's get moving over here. All right. So market updates, all right? We will always start our Friday sessions with market updates over here. Now, so let's get to the market and, it's going haywire as usual. All right, so here we are, and 1 week later, all right, all of you can see what I've been talking about. Nothing much has changed officially, right? Just the fact that right now we have came back inside, all right, of this breakout resistance now, resistance and support, and now back to a resistance, right? And if all of you remember, all right, if all of you remember over here, right, I did say that if it breaks, right, the break is actually going to be pretty severe, right? And we're actually seeing that happen today. Right, we're down by about 1% right now. The S&P is down 40 points after yesterday's close. Right, so we sort of have a gap on the open, right, and now it's pushing lower. Right, so bar none, all right, bar none, based on the sentiment that is happening right now, we may be seeing one of those 100-point down moves day, right, by the end of closing today. Right, by the end of closing today. All right, AK, all right, you shouldn't be hearing echo because I'm in control of this. It's not a Zoom session, yeah? All right, now, so, yes, as I was saying, today may be one of those days where we see a 2.5% drop or maybe like that, 100 points on the S&P, yeah? Okay, now, why? Because it is Friday, so if the sentiment continues to push lower, right, people do not want to hold these positions over the weekend. All right, so it may trigger off more selling before the market closes. Yeah, okay, all right, now that's why I say we may be seeing one of those 100-point down days over here. Okay, now, so nothing is for sure. Let's see what the market wants to bring about, right? But definitely we have to position ourselves and we have to protect ourselves because right now we're back into the zone. Now, once we're back into this channel, we're back into this zone. That means that nothing, all right, nothing is going to stop the S&P all the way down to 4080. And now we're at 4180, which means we are another 100 points away. Yeah, all right, we're another 100 points away. Nothing really stops it until then. Yeah, all right, now, so that's what I'm seeing right now, and new positions into my portfolio, right? Simply because I have a long-term view when I build such a portfolio, right? Please remember, all right, this Friday sessions, I'm building investment portfolios. They are not my trading portfolios. So trading portfolios usually have a shorter term focus, right? And I don't want to buy stocks at the end of the day, right? So like one of the Facebook user who was asking a question earlier, right? Hey, Terence, what if, I don't want to buy the shares with these put options over here, right? That is something that we cover in our mentorship programs. So if you're really interested how to find out, right, strategies that we deploy and strategies that we use to sell options, right, and put options without the liability of having to buy the shares, and how we do this for a fraction of the capital, right, based on what we're doing today, right, then, all right, consider one of our mentorship programs and join us to learn how to be an effective, right, and of course, profitable option seller. Yeah, okay. Now, so back to the part over here. Hi, Chiwi. All right, now, so market is down, so let's go to our portfolios, yeah? All right, now, without further ado, let's go to our portfolios. So our first stock that we need to check up on, nothing to check on JD because it expires only in January next year. All right, so I'm just going to hold on to this position. How about VZ? All right, we have a VZ that expires on 16th of July, 57.50. Now let's see what the market correction has brought about to VZ over here. All right, it has brought it down. Yeah, all right, it's brought it down. Ooh. All right, so the market didn't spare VZ as well. We have a down day over here today, and we're down about 70 cents. Okay, now I'm not going to add. Okay, I'm not going to add because I already have a position, right? And that's how usually I build my portfolio, right? I take the size of portfolio exposure that I'm comfortable with, right? And I stick with it. So what it means right now is I have another 1 month. So I'm not panicking at the moment, right? I have another month before I decide what I need to do with this particular trade. right? If that time comes and it still stays below, then I'll just take the shares, right? Because once I own the shares, I can turn around and be a call option seller, right? Until we become profitable. Now, those of you who have joined me every single week, right, have seen me done this twice, right, on the assignments that we had on Consolidated Edison, all right, and also on Nokia. Yeah, all right. So these were two stocks that we sold put options on, right, that we eventually end up buying shares, right? And you realize that the occurrence isn't a lot because we have done 55 trades right now, right? We have only really taken assignment on 2 of them. Yeah, okay, only on 2 of them. So the probability of success on our portfolio is still very, very high, and it remains high. Yeah, okay. Now, so I know what I'm doing, and that's why I'm very comfortable, right, with the positions that I take on. So with VZ over here, I'm not doing anything. All right, the stock is below. I have another month, so I'm just staying put. Okay, now next, CAH. So let's see what CAH has done. I know CAH has fallen as well together with the markets. Right, we are at 56.28. Right, and we have a 57.50 put option for 16th of July. So nothing as well, right? No actions to be taken, right? So no moves to be made. Now, how about Tupperware then? Right, so we have a Tupperware 23rd, not 23rd, $23, right? $23 put option, right? And Tupperware fell, all right? Tupperware fell to $20, right? But I'm nowhere near anywhere afraid, okay? Because a fundamentally cheap stock just got cheaper over here. All right, now, so what do I mean when I say fundamentally cheap stock got cheaper? All right, we basically mean this. Hang on, everyone. Right, when we started this trade, this stock had a PE of about 8. Right, so when we did this trade, all right, based on the stock price when we entered, all right, it had a PE ratio of 8, which is significantly undervalued. Right now, and what's happened is as the prices went down, right, we are now seeing a PE of 6.5, right, on a company, right, that's not really expanding very fast, but it's still making money, it's profitable, right? So I'm comfortable, all right, with this kind of price range over here. Yeah, okay, because I do not expect a lot of push on the downside. Yeah, okay, and when the market rebounds, I think they're going to rebound pretty strongly, right? So I also have all the way to July, right? Hence, I'm not pushing any panic button yet. Okay, no panic buttons yet. Now, the last stock was something that we added last week, all right, and that's Baidu. All right, now, so for Baidu over here, okay, I'm not panicking as well, simply because I have all the way to December, all right, and that's why I said last week, all right, now I did plan for a market correction to happen, all right, and that's specifically why, all right, I actually sold and chose to sell a longer dated expiry, all right, okay, we could have chosen Baidu for July, all right, but in the end, we chose a December expiry. Why? Because I said if I was right, okay, I could have the luxury of closing this trade early and taking my profits. Okay, but if I was wrong, then I won't be pressured by the time, okay, to do something to it. Yeah, okay, I won't have to pick up the stocks anytime soon as well. Yeah, okay, now, so what has Baidu done actually? Baidu has done not much actually, right? From last week, it barely moved, right? Hang on for a minute. Right, it barely moved. All right, as you can see, as what I said, a good stock has fallen very sharply. All right, and because it's undervalued, all right, it's probably going to sit around even as the market collapses. Right now, and that's exactly what we're seeing in Baidu over here. And I do believe that if we check on this position right now, we'll probably see some profits. Not a lot, but probably some. So we have the 17th of December, 180 puts. All right, so let's have a look over here. Right, so it's a widespread over here right now, but I do believe that we are around about $15 is where we see over here, all right, based on the last time price. All right, so we are about break even. All right, so we are about break even over here, so nothing to shout about as well. Okay, now, so market doesn't give us much management actions to do, unlike the previous weeks, because we have a week where we're down, right? And these are part and parcel of trading, right? And we all know this. When you're investing, right, when you pick up stocks that have fundamental values behind it, right, you need to make sure that you are in it for the long haul, right? This is not a trading portfolio. So whenever I sell a put option on any of these stocks, That's why we always say, all right, you need to do your own risk assessments. You need to do your own judgments before actually taking on any of these trades. Why? Because my time horizon may not be the same as yours, right? What are you looking behind this trade, right? I'm looking to buy the shares if I need to and actually hold them, right? Are you, right? Because if you're not willing to, or you have not allocated the capital, right, then this same trade may not be suitable for you, right? That's what I'm really trying to say over here, right? Because every put option that I sell, I've allocated the full cash amount, right, to actually picking up those shares. Okay, everyone? All right, now, so what stock am I going to add today? Let's go to the stock where I'm going to add into the portfolio today. Today, I'm going safety. All right, I'm going safety. Now, which means I'm going defensive. So as the market goes down, all right, there will be sectors over here, all right, where stocks become defensive. All right, and today, all right, I'm going back, right, to the simple necessities. Today, I'm going back to Kroger. All right, now, why Kroger? Because we've traded Kroger before and it's done well. All right, and second, right, Kroger is starting to have a breakout move, all right, in amidst this sell-off over here. All right, so with this breakout move over here, I do see strength, right, even when the market goes down. Okay, so if the market comes down, I do see that all these necessities like supermarkets and hypermarkets over here, all right, will actually do well. They'll actually stay strong. All right, so I'm going to take advantage of this, right, and sell a put option on this stock right now. Okay, so I'm going to sell it based on this breakout support right now of about $38. Now, I'm not going to go too far because this is a defensive stock play, right, amidst a market correction or amidst a potential market correction, right? So I'm only going to give this all the way till 1 month later, which is 16th of July, right? So I'm going to go for the 16th of July, all right? All right, I'm going to go for 16th of July, 37 puts over here, right? 37 puts. I'm going to aim for about maybe 53 cents on this, okay? 53 cents on this. Now, please make sure before you decide to go do anything with this stock, right, I'm actually going to allocate, right, $37, right, to buy the shares for every stock that I'm selling on, right? So when you trade options, one option contract is actually equivalent to 100 shares, right? So typically for stocks in my portfolio, right, in these sessions, I typically take about 3 option trades. Okay, now 3 contract option trades. Now, so that means I need to be ready, right, to actually buy and own 300 shares of Kroger. Now, so if I have to buy 300 shares of Kroger, right, at $37 a piece, right, that means 369, 714.21. All right, I need to set aside about $11,100, right, to sell this put option. Okay, now that will be the cost to buy 300 shares of Kroger, right, at $37 each. Yeah, all right, now give me a moment. I'm just going to place that order, all right, and let's see if we can grab that price over here. Prices that went down. All right, so I'm just going to readjust. All right, I'm done. All right, I've taken the price of 51 cents over here, everyone. All right, so I'm just going to show all of you for you to verify. All right, based on the platform clock, which is 2106. Right, my order just got done. Right, for Kroger July, right, 37 puts. Right, 16 July Kroger 37 puts. I sold 3 contracts. Right, at 51 cents over here. Right, at 51 cents. So the order is done. It is now officially open. Right, in this model portfolio. Right, that I'm building together with all of you. Yeah. All right. Now, so let's go to the portfolio entry. Okay, so, ooh. Okay, now, so let's enter this into our portfolio right now. Okay, and this is going to be trade 56 for our portfolio. So today I'm selling 3 contracts of Kroger. All right, 16th of July. Right, 37 puts, right, on the 18th of June, right, for 51 cents. So this trade is going to pull in $153 in cash flow, all right, for my behalf over here. Now, what's the ROI on this trade? The ROI on this trade is going to be 51 cents divided by $37, which is our investment. All right, now, this trade brings about 1.38%, right, in 4 weeks. Now, so what I'm going to do is I'm going to annualize the return of this trade. Now, so when I annualize the return of this trade, which is 4 weeks, right? And then re-multiplied by 52 weeks in a year, right? That brings about 18% returns, right? We're close enough, right? We're close enough, right? Now, so if according to my plan, right, Kroger stays strong amidst a market sell-off, right, what's going to happen is we're going to be able once again to close this trade before it expires, right? And when we do that, okay, what's going to happen is the annualized return on this trade is actually going to go higher. So I'm starting right now on a trade which is paying out an 18% annualized return. If I can close it anytime earlier, right, it's probably going to exceed my target of 20% per annum. So that's how I make my judgment decisions. First, I choose the stock I'm comfortable with, right? Second, the stock is trading at a valuation that I'm happy with, right? And then third, right, I pick an option that pays me enough and gives me the returns that hits my target, right? And fourth, I make sure I allocate the required capital, right, so that I never get into trouble for an investment portfolio. This will allow me to sleep well at night, not worrying about this trade at all, right? Like, some of you have raised it up, Terence, this has crashed, that has crashed. What do we do? Doesn't matter. For an investment portfolio, it really doesn't matter because I have the funds, I've allocated the funds to pick up the stocks, right? And when you're buying good stocks, all right, you know one thing for sure, good stocks will always rebound. Why do they rebound? Because if you have started, all right, at a stock that is profitable, right, and trading at very low valuations, right, the valuation side of thing is going to start kicking in, right, very soon. It may not be now, but it's going to kick in very soon, right? And once it kicks in, right, it will catch up in a hurry, right? So that's why even if I have to buy the stocks, I'm never worried. Yeah, just like what happened with Consolidated Edison, right? I took the stock, I took it, right? And then I'll spot for opportunities to try and generate more cash flow, right? Nokia, right? It wasn't one of those fundamental stocks. It was more like a growth stock that we wanted to take on. Yeah, all right, but we did it as well, right? And it still worked out as well, right? Now, so this is a very simple approach, a very basic approach, right? And then, we went ahead with it. Okay, now, so I do have a question over here from a Facebook user, right? Now, so I'd like to do this before I actually reply your question. I would like to know who I'm speaking to, right? So if you go to the Facebook where this live stream is happening, right, you'll see a link over there which says streamyard.com/Facebook, all right? Can you click through that link, right? And there'll be a blue button, all right? Can you click that blue button to approve it, right? And then please, after that, just retype the question. Okay, because I'll be able to see who's asking the question, right? And I can address the reply back to you in person, right? If you could do that, right, I'd be more than happy, right, to answer the question right now live on air, okay? All right, thank you very much. Okay, let's get going. Now, so that is what I'm going to add to the portfolio today, all right? And I'm going to just wait for the Facebook user to actually, hi, Hernando. Eagle Eye Hernando is back. Thank you very much. All right, so Dan, can you do that for me, Dan? All right, just click on the StreamYard link, all right, and you only need to do it once, yeah? Okay. All right, so this is what I'm going to add to my portfolio, and I don't want to add too heavy, all right? I don't want to put in too much capital to work, right, just on the onset of what is maybe a potential market sell-off. Right, so I want to keep some bullets. I want to reserve some bullets for maybe next week. If we do get a more severe sell-off, then I have those bullets to add on more good trades because stocks are going to come lower in valuation. Right, they're going to be more attractive bargains. Right, and putting my capital to work, right, is going to pay me much better returns. Yeah, okay, all right. Hernando, if you want to take this trade on a portfolio basis, which is just like what I did over here, and you have the capital to allocate to it, and you have a long-term view just like I do, right, then, like I said, there's a disclaimer over here, right? If, do your own risk assessments, do your own judgments before jumping in on any of these trades. Yeah, because I'm doing this right now more from an educational purpose, educational angle, right? So if you're comfortable, by all means, Nando, right? Because I did mention in last week's session, if you are selling one portfolio puts, right, this stock, because of the price, right, it's actually going to set you back $18,000, if I'm not wrong, right? Let me just double confirm that. Yep, $18,000, right, for one option contract. Yep, okay. Now, so as long as you have allocated that, right, then even if anything happens in the near term, right, or by December, you have the capital set aside to actually pick up those shares. Yeah, right? And then or if you want to deploy it based on our strategies that you have learned from us in the mentorships, right? Just do the necessary adjustments. Yeah, you know the drill, Hernando. I know you know the drill. Yeah, okay, all right now. So it's definitely possible. Yeah, all right, it's definitely possible. Right, everyone. Then it is there. It is there. No worries, Hernando. Right now. So I'm just going to do this one time over here. All right. I'm going to do this one time. Then after the session, please find the StreamYard link and just click it once. All right. So that next week when you join us again, right, we'll be able to see your profile appear and address you in person. Yeah. Right now. So Dan's question is, hi Terence, why do I set an expiry date later, such as December 21st? Okay. I actually said it just now, Dan. Right now. Last week when we entered this trade was done last week, right? The Baidu one. Right now, when we were looking at planning for this trade, right, I wasn't comfortable, right, with where the market stands. Right, the market just broke out. Okay, but I did say yes, it may edge a bit higher, but we expect a correction after that. Okay, and 1 week later today, we see that correction. Right, so whether I'm right or not, I don't want to talk about that. Okay, but this is where, from experience, okay, I can take defensive actions, I can take defensive moves on my portfolio and how I plan, right, my trades that I add into my portfolio, right? So a lot of people say, oh, when market is ready to correct, you should keep all your money in cash, right? But it just doesn't work out because the problem is you don't know when it's going to correct. Because when I started this entire portfolio, right, we started our first session back in July last year, right? Then would you agree that back in July last year, right, everybody was already expecting that market correction, right? But it never came, right? And 1 year later, right now, it still hardly came. Right, it may be the onset, but it may rebound again. Right, we don't know. Right, so the only way, right, is to find alternative means, right, to take defensive actions. Right, and that's where I decided, right, if Baidu is straight, I do take it. Right, I don't want to be owning these stocks anytime soon. Right, so I decided to sell a December expiry option. Right, why? Because if the market corrects and Baidu stocks come down, right, my option is not expiring anytime soon. Right, so I'm not liable to have to own those shares all the way until December. Right, I can stay in an option trade all the way into December. Right, I have no problems with that. Okay, because I was getting paid $15, right, in time value. Right, when we started the trade was not in risk at all. Right, the stock was still above it. Right, that means I was being paid $15.30 for absolutely time value. Right, and I did like it. Right, that's why I decided to go ahead with the trade. Yeah. Oh, Dan, I just saw your question again. Right, so Dan's follow-up question is he's asking on behalf of KR. Right now, because KR, I have a totally different play. If you heard what I was explaining just now, KR is a defensive stock, right? And defensive stocks usually do well amidst a market correction. Yeah, amidst a market correction. Right, so if it pays me well enough in the next 1 month, right, then I'm happy to take that position. Yeah, okay, because also I pointed out just now, based on what I see on the charts, it looks like it's having one of those breakout moves. All right, it's having one of those breakout moves over here. So if this breakout move were to materialize, right, the stock is going to hit the support level and then start bouncing again, right, maybe on Monday, Tuesday, or Wednesday next week. So if that happens, I can actually close this trade early, right? Maybe even by next Friday. Yeah, okay, so this is why I've decided to sell a shorter term, basically. Right? Yixing, that's a wonderful question over here. Do you have a crystal ball, Yixing? I don't. Right, so I only can plan the trades to my best ability, right, and what I'm leaning on, right? That means which side I'm leaning heavy on. Yeah, okay, so I don't know when the market correction will be over, right? Because as of right now, if we talk about the S&P, right, if we get a rebound, right, and break back up, right, the correction is over. Right, but if it keeps going down, right, the correction is not over until it hits 4080. And then if it decides to bounce from there, because if it doesn't bounce from there, it's just going to break through and then the next support is 3980. Yeah, if it breaks that, then it keeps going, right? So that's why I keep saying you won't know, right? You won't know that. Okay, only time can tell. So instead of waiting, right? Instead of playing the waiting game, right? Continue to take positions that you're comfortable with, right? Just in case you're wrong, right? You're comfortable with the trade, yeah, right? You're comfortable with the trade, so you're not rushed, right? To misjudge or take any necessary actions on it. Yeah, okay. I won't know. I won't know, right? If you do, maybe you can tell me. Yeah, right. That's why I say easing just now. All right. I don't trade like as though I have a crystal ball. Right. I always tell my students this. I don't trade as though I have a crystal ball. And that's why I specifically choose to be an option seller. Right. Because if I do trade like I have a crystal ball, I would be going long or I would be going short on the stock itself. Because as you can see, right, that's probably going to make me a lot more money, right, in a very short time frame. Yeah, so one of the luxuries on being an option seller, right, is the luxury of having buffers to be wrong and still end up profitable, right? In fact, in our portfolio that we've done so far, right, there were at least 8 or 10 trades, right, where, right, on expiry, the stock price was still below our put option strike. But because of time value and time decay, right, we could still end up profitable on the trades. Yeah, okay, so that's one of the luxuries that we get selling options over here. Yeah. Right, Andy, right? It's entirely your perspective, right? Like I said, oh yeah, Andy, I'm running these sessions once a week, which is Friday. All right. Okay. So, I don't have the luxury of taking it on like Tuesday, Wednesday, or Thursday. Right. But it doesn't mean that you have to take it today, Andy. Yeah. Okay. When building your portfolio, right, your money is at stake. Right. So you can choose the best time, all right, from what you see on the charts, right, to pick your entries, and it doesn't have to be today. Yeah, okay, Andy. Right now, but I just want to show mainly, all right, even beginners who are joining our sessions over here, right? This can be done very, very simply over here, right? Even with a simple approach, right, like what I'm doing, right? I hardly care about, whether it's the best timing or not, right? Every Friday, I add a stock if it makes sense, right? I'll add a stock into the portfolio and just try to continue to grow the account, right? Simple does it, basically, right? Simple does it. Yeah, okay. I love the way you say this, Andy. Right? I have observed stocks for 10 years. Right? I can tell you how it behaves. Right? But I still don't know how it moves because surprise happens. Yeah. All right. Surprise happens. Yeah. Okay. So I never trade, right, from a complacent manner. Right? That's just me. Right? That's just me. Yeah. Okay. All right. Okay, this is a long one. This is a very long one. Right now, so I missed someone sharing when I exit the video. Not really. Okay, all right. Then I believe it's you again. Right now, then not really, because actually sometimes when you go longer dated, right, you get compensated lesser, right, for the amount of time that you're taking up. Right? Because if you sell options, you would know that, time is the most expensive and it decays the fastest within 1 to 3 months, right? 1 to 3 months. In fact, the most effective is 1 to 2 months. Every day that passes, you will see effective decay on the premiums of the options, right? But for longer dated options, right, you do need a little bit of a directional view, right? That means you need a little bit of assistance from a stock price movement in your favor in order to close the trade early, all right, with a beneficial profit. Yeah, okay, beneficial profit. Okay, all right, now, so that's what I'm going to do over here. Yes, Fernando, don't worry. Based on his question, I know it's still there. All right, now, that's my portfolio move for today over here. All right, everyone. And just before I close the session, all right, all right, I'd like to, share a little bit of something special that we have lined up, right, and something special that we have planned just once. Okay, just once for all of you who have been, loyal supporters and joining me every single Friday. Okay, now, so all of you have probably seen some of our participants type and comment about, their success with the 24-hour earnings explosion strategy. Right now, what I want to say is Q3 earnings season is coming up right around the corner. Right, it's less than a month from now. Okay, now, so what we have done is we are organizing, right, only one time special introduction session, right, for those of you public, right, or who have not done 24-hour live trading with us, right, for an opportunity, right, to join us for season 3, all right, okay, Q3 season. Okay, now, so if you like to get your hands on 24-hour live trading room experience together with me, right, now, what we have done over here is we have slotted a date, right, specifically for this. Right now, what am I going to do during this session? Right, if you join us, I'm going to show you how we deal with earnings trades, right, and how we plan the day before earnings, right, on knowing what directions that the stock will go. Right now, and then knowing that, how do we plan a low risk strategy, right, and then take the trade and realize a decent, very decent profit the very next day. So for earnings explosion trades, we make anywhere from 20% up to 50, 60% on the trades that we take in just one day over here, right? And it doesn't just have to be one as well. Once you learn the strategy well, right, we even have students, right, for example, WH Hall over here, right, who have made on June 2nd with us, right, 4 trades during that day, right? And you can see his returns span anywhere from 6.7%, right, all the way up to 31% on the 4 different stocks. Yeah, okay, and Hernando, right, Hernando, you're here too, right? Hernando has done really, really well with 24-hour as well. Yeah, okay, now he's only joined us very recently as well, right, in Q2 season of 24-hour. Okay, and he has latched on very, very quickly as well. All right, so, you know, I'm really thankful for these wonderful participants, right, who have shared their results with us, okay, and, you know, that they've done really, really well. Okay, now, so we have Simon over here as well, who have ended the earnings season in Q2 with 19 wins and only 4 losses. So that's like an 82% win rate, okay, during an earnings season. So many of you who have traded earnings before, you know that it's like 50-50, right? Now, what if I can teach you a strategy where you know and can know the direction of the move of earnings, right, more than 80% of the time? Yeah, okay, so with the right strategies, you can stand to make big profits, right, during an earnings season. All right, and yes, I do believe Andy has done really, really well too. Nando, you love it, right? You can have your coffee while you trade it, right? Right now, I believe Andy has made quite a substantial amount, right, during these live trading sessions, right, that we do and run based on the 24-hour earnings strategy as well. Now, what's very likable about this trade is you don't hold positions, right? You get in the day before earnings, right, and the next day when the market opens, right, you immediately close the trades. So if you want to find out how to make these explosive kind of returns, right, during a month-long, right, earnings season, right, and pick up the strategy so that you can continue to use it, right, every end of the quarter, right, for years ahead, right? This is a strategy that keeps lasting. So once you learn it, you can use it over and over and over again for all the future earnings seasons, right? Now, so if you'd like to find out more, right, just go to the link over here that we prepared, right, bit.ly/24-hour special. Now, we're only going to do this session once. Okay, it's only going to happen once, okay, on the 1st of July, 8 p.m. Okay, 1st of July, 8 p.m. Now, it's going to be a Zoom webinar, right? So when you join us and opt in over here, right, my team will get in touch with you for the registration of the session, right? We'll send you the link to register for the Zoom session, right? And then just all you need to do is join us for the session. Yeah, okay, where I have a bit more time, I can describe to you more about the strategies. How do I run it? How do I build it? Right? Why does it work? What is our track record so far for it? Right? And you decide, okay, if you want to join us for season 3. Yeah, okay, for season 3. All right, now, thank you very much, Herbert. All right, now, I didn't solicit this, yeah? All right, but Herbert says the 24-hour is easy to learn, all right, highly recommended over here. All right, now, so for those of you, all right, who are, okay, looking at this over here, join us for 24-hour, okay, and we'll get this thing done, yeah? Okay, now, thank you very much. This is where I bring this session today to a close. I'll put up a link once again. Right, thank you very much for joining me on my live Friday sessions again. If you have not clicked on the share button, please go ahead and click on the share button. Yeah, all right, okay, and then I'll see you next week and on the 1st of July if you're interested in the 24-hour earnings explosion, yeah? All right, now, thank you very much. This is Terence signing off. I've got another session after this with my members. We're running a Q&A session. So members who are joining us, I'll be sending out the Zoom link, right, in the Telegram channel really soon. Look out for it and then join us for the Zoom session, yeah? Bye-bye, everyone. I'll see you next Friday. Thank you very much. All right, Hernando, thank you very much for adding that in. Yeah. All right. You always need a last say. Yeah. All right. Bye bye, everyone.